My name is Ron Hosen. I'll label this what's left of value investing, or value investing, what's left of it, January 25th, 2011. I manage an account for my niece. I don't do this, I'm not selling anything, I don't do this for money. I manage her account and have done so for 15 years without any pay. I managed my own account until I reached 65 years old, which was 9 years ago. So, I put on these videos because I'm by nature a show-off, and I have such a spectacular record that I wanted to share it. Also, people who traded alongside of me starting in mid-2008. I started in mid-2008 with videos because I don't know how to do videos and I don't know how to upload them. But I found this 14-year-old kid who did know how. And so whenever he could get an afternoon off from school, he could put up a video. So I wasn't able to put them up exactly when I wanted to. But the timing turned out pretty well. And if you go back, all those videos are still up. Had you traded alongside, you would have missed the collapse in '08, but would have caught the first half of 2008. And you would have caught the upturn in March of 2009. And I don't remember what else I put out, but as good as I am, you probably would have made money with me. So, I calculated a record so that I could be compared to professionals. Now, remember, I make nothing out of this. I'm not selling anything, and I'm simply telling people what I am personally doing on behalf of my niece. In reality, I'm a bum. And in reality, my niece, at least until the last couple of months, has been a bum too. She's now been able to market herself a little bit as an Argentine tango teacher and a yoga instructor. She's not much better at marketing herself than I am at marketing myself at anything I've ever done. However, we're both highly skilled in those things where we can't market ourselves. So, I have a 20-year record, which I've kept. I've kept the records provided me by Fidelity Brokerage, and they calculate this too. So they've done the calculations as well as provided me with detailed paperwork. I'm up 18.5% over 20 years, over 15 years, and that includes the time managing my niece's money, 22% annualized. The last 10 years, which has been only my niece, 14.5% annualized. And over the last 5 years, when a typical professional either has a negative record or a zero return, my record is 22% annualized. Now, you may wonder how I got to be that good, or you may not. I haven't the slightest idea. But if you're interested in what I'm doing now, or you could look back to the November 22nd, November 22nd or 15th, or whenever the last one was, I recommended coal stocks as a trade. Seems to me that natural resources will tend to be in short supply, on average, over the next 10 years. And so getting into something like fertilizer, crude oil, and at certain times, coal, uranium, can mean, if you're patient, a long-term payoff. So I gave you Nexen, NXY, Suncor, gave you a deep water drilling company domiciled in Norway called Seadrill that pays a big dividend, by the way. A couple of integrated companies, Total, State Oil, and Occidental. Now, they were a little expensive at that time, except for Nexen. Except for Occidental, these are Canadian companies. They have reserves in Canada. Canada has a fairly tolerant policy toward obtaining synthetic oil from the oil sands of Alberta. And there's no national security risk for American investors. So it appears that there's no great movement away from gasoline as the fuel of choice for transportation, particularly in the U.S. The U.S. is one of the really large producers and consumers. And it appears that some of the growing, some of the developing countries are gradually increasing consumption. So, I think a barrel of oil in reserves is probably its present value, even if you're not going to get it out for 5 or 10 years, maybe on the order of $20, $25. And the companies I recommended don't have much in the way of debt. Now, at the moment, January 25th, 2011, had you bought as a trade the coal producers, I stressed American Natural Resources, you would have had about, if you had waited for it to turn around and start coming down, which is the signal to get out of the trade, you would have had about a 30% gain, and also in the other coal companies, not that good. The oil companies are up 10–15%. the fertilizer producers, their prices of their shares have gone way up. But stock prices are cyclical, and this is particularly true of energy companies. So the prices of shares of oil companies are very, very likely to come down. And so if Oxy drops, say, to 80 or 85, if Suncor goes down to 33, which is where it was when I made the last tape 2 months ago. Nexen, I think is a good value in the low 20s. And Canadian oil sands, say, below 25. And if you own State Oil and Total, I think you get a pretty good dividend. They probably have had their move. Canadian Natural Resources, CNQ, if you had bought it when I recommended it, you would have paid 38. It's about 43. If it goes down to 38, I think it'd be a buy. Now these are long-term holds. I don't have any ideas about anything else. I don't trust manufacturing stocks. I don't trust retailing or restaurant. I think these are stock fads. But I really don't know what I'm doing in the stock market. There was a time when I did, but I don't think there's any rational basis for finding value. So what I look for and what I personally own is a Canadian closed-end fund called Cox Commodity Strategy, CXCMF. And I bought something that was mentioned in Barron's, and this is called Participation Corp. They own storehouses of uranium, and the symbol is URPTF. So I'm running out of time. I'll finish this up on the next tape.